Good evening, everyone, and thank you so much for joining us today. Welcome to the USISPF SW webinar on tax technology, AI, and transformation. And it's really encouraging to see such strong participation from across industry. That in itself tells us how important these conversations around tax technology and digital compliance have become. For today's session, we'll be setting the context through global e-invoicing landscape. I'll also briefly touch on India's e-invoicing journey and the evolving invoice management system under the GST framework. We'll be covering India's e-invoicing, IMS, and AI in tax in much more detail in the next session. Let me begin with the global picture. Across the world, tax administrations are moving very quickly towards mandatory e-invoicing and real-time or near real-time reporting. This isn't a passing trend, it's a structural shift in how tax systems are being designed. The drivers are fairly clear. Governments want to reduce tax evasion, improve compliance, and get faster and better visibility into transactions. In Europe, for example, several countries have rolled out phased e invoicing mandates, particularly for B2B transactions. Many of these are based on continuous transaction control models where invoice data is either validated before issuance or reported almost immediately after. In Asia and Southeast Asia, countries like Indonesia, Vietnam, and Malaysia are also expanding e invoicing and e reporting frameworks as part of broader VAT and GST reforms. The common thread across all these jurisdictions is a move away from periodic, after the fact reporting towards always on system driven compliance. And of course, for businesses, this is a big change. Tax compliance is no longer something that happens at month end or quarter end. It's becoming embedded directly into day to day business operations. Let's look at what this means for businesses. From a business perspective, this shift brings both challenges and opportunities. On the one hand, companies now have to manage multiple systems, formats, timelines, and validation rules across countries. On the other hand, organizations that invest in the right tax technology can actually gain better control, better data quality, and fewer disputes. This is where automation and AI start to become important. Managing high volume, real time data simply isn't possible through manual processes anymore. India's e-invoicing landscape, I think what the one of the major focus of today's session is looking at the global landscape. But if we look at India's e-invoicing system, it is one of the largest and most ambitious implementations anywhere in the world. Real-time validation through the invoice registration portal, combined with progressive expansion of coverage, has fundamentally changed how B2B transactions are reported. At a high level, India follows the same principles we see globally: real time data, system led compliance, and tighter linkage between invoices and tax reporting, but at an unprecedented scale. We'll be spending much more time on the operational and compliance aspect of India's e invoicing framework in our next session. Before I hand over, I would like to briefly touch upon the Invoice Management System, or IMS, from a policy engagement perspective. The USISPF Tax Forum has been continuously engaged with CBIC both before and after the introduction of IMS under GST. In June, USISPF was invited by CBIC to present industry challenges related to IMS, including system readiness, transition issues, and implementation timelines. Following that, the Tax Forum has submitted detailed recommendations to CBIC based on feedback from a wide cross section of industry. This ongoing dialogue between industry and government is extremely crucial as digital tax systems continue to evolve. We'll discuss IMS in much more detail in our next session. I'd like to also briefly touch upon AI and tax. Just a quick word on both aspects, since it's quite central to this broader transformation story. Globally, tax authorities are using AI and analytics, advanced analytics, for things like risk assessment, fraud detection, invoice matching, and audit selection. At the same time, companies are using AI to automate validations, identify anomalies, and manage reconciliations. The key point is this: e-invoicing, IMS, and AI are all connected. Structured real time data is what makes AI possible. And we'll definitely explore this in our next session. It gives me great pleasure to introduce our main speaker today, Mr. Ankur Gupta. Mr. Ankur Gupta is the practice leader in direct tax at SW. He's a chartered accountant with over 15 years of experience across GST, customs, and allied areas such as foreign trade policy, SEZs, and state industrial incentives. He has advised clients across industries from FMCG and automotive to manufacturing, energy, e commerce, infrastructure, and defense manufacturing. He has represented multilateral corporations at appellate and tribunal levels. Today, Ankur will take us through a deep dive into the global e invoicing landscape, highlighting key trends and what organizations should be thinking about as these mandates continue to evolve. Also, we'll be taking any questions at the end of this presentation. Over to you, Ankur.
Thanks, Shreya, and good afternoon, everyone. Uh, in the next 30 minutes, what I'll be doing is taking you through the global landscape of e-invoicing uh, across the globe. Now, so here's the fact that matters. So, as of today, more than 90 countries have e-invoicing mandates either in place or rolling out soon. But what really matters is in the next 12 months, if we talk about globally, so most of the big countries, Belgium, France, Poland, and UAE, are all implementing mandatory invoicing requirements. So, if you are in international business, or even if you are not yet but planning to, this isn't theoretical anymore, and e-invoicing is something that needs to be taken care of. So, why does it matter and what it actually means? So, if we look at the old model or how traditionally it has been done, so you issue an invoice, your customer receives it, eventually enters into this system, and you report it into your monthly or quarterly VAT returns. The tax authorities see this data 30 or 90 days later, depending on your periodicity of return. And if at all there is any fraud or discrepancies noted, audits happen months or maybe years later. By then, the damage is done. But what this real-time reporting means, so you issue an e-invoice, it's automatically validated and submitted to the tax authorities. Your customer system receives it and matches it to their record. Tax authorities see the discrepancies in real time. Fraud can be detected as it happens, not after. Compliance becomes continuous, not once a month or quarter. That's what we are seeing in India as well. So, this is a complete fundamental shift. Tax authorities are also moving from post audit manual, where they catch problems after the fact, to a live validation model, where they catch problems instantly. This changes everything how business operate. Now, from a business perspective, so why should you as business care about this right now? So three reasons for that. One, this isn't niche anymore. This is becoming the global standard for how business operate. Second, cost efficiency. Early adopters have reported that they have seen 40 to 50% reduction in invoice processing cost. That's significant. Imagine cutting your AP and AR. over it by half. That's what automation delivers. Third, compliance risk. If you're operating in, say, Belgium, France, Poland, UAE, Malaysia, India, or any of the 90 plus jurisdiction which mandates e-invoicing, you must comply with the deadline. Non-compliance carries penalties, supply chain disruption, audit exposure, and damage to your trusted trader status with tax authorities. That's a stick, but there's also a carrot as well. Business that modernize first gain a competitive advantage. They are compliant, they are efficient, and they are positioned to grow internationally faster than competitors still using manual processes. Let me walk through this transformation model one more time because this is the mental model that you need to take away from this webinar. On the left side, you see the traditional model where you file your monthly or quarterly VAT returns, manual data entry by your finance team, post submission audits happening months or years later, reactive fraud detection, and we catch the problem after it has caused damage. On the right side, you see the current real-time reporting model where real-time invoice submission, which happens within 24 to 48 hours in maximum of the countries, often instantly automated validation. The invoice is checked by machine learning models before it even reaches your customer. Instant compliance monitoring. Tax authorities also can see the transaction real time. Discrepancies are caught before any payment is made by the recipient and not after. So it means that your finance team, if we talk about the finance team or the tax team that takes care of your compliances and the accounts, so your finance team can't just batch process invoices anymore. They need automation. Secondly, invoice accuracy is mandatory. One error cascades into the supply chain. You need to understand tax rules in the real time, not retroactively. Fourth, your ERP systems need to be tightly integrated with e-invoicing platform. Now, this is fundamental operational transformation. Now, let's zoom out and see the global picture. Where is e-invoicing actually being adopted and at what scale? Starting off with Europe. So, Europe is leading the charge. Belgium, France, Poland, Germany, Italy, Sweden, Finland. These countries all have mandates in place or rolling out through 2026, 2027. The EU VIDA initiative is driving this. These are your first mover markets. Moving on to Asia Pacific, it's moving fast. India has been running GST invoicing for a while now. Malaysia has My Invoice portal, which is requiring a real-time validation. Singapore is also advancing, and the UAE is integrating with PayPal this year. These are growth markets with massive transaction volumes. Coming to Latin America is actually the most mature market. Brazil pioneered e-invoicing back in 2011. They've been running it for 15 years now with over 90% adoption rate. They've proven that e-invoicing works, it reduces fraud, and it increases tax revenue as well. Mexico and Chile are also established leader. So when the EU or other regions tax authorities look for best practices, they look at Brazil. Middle East is also moving. Saudi Arabia has Fatura since 2020. UAE is integrating with PayPal and Zatka requirements. So these governments are primarily using e-invoicing as modernization and compliance tool. North America is slowest, but even here, the US IRS is building infrastructure for real-time reporting. This is coming to North America too, just on a longer timeline. Now, At the bottom right, we can see some statistics which provides that e-invoicing market is close to 15.5 billion and is growing at 20% annually. Cost saving is around 40 to 50%, which reduces the processing time of the invoice. Then VAT gap closure. So people have actually seen 30 to 50% reduction in VAT evasion in the countries who adopt early. So the entire flow is that this trend is not a regional trend. This is a global trend, and the scale is also very massive. Now, what are the trends around digital tax compliance? So, the first one is continuous transaction control. So, what does it mean? It means that the tax authorities require you to submit invoice data in real time or near real time, typically within 24 to 48 hours of transaction. And here's the key part that authorities also validate it immediately. So, as I highlighted earlier, the tax authorities used to get the data annually, quarterly, depending on the requirement of the compliances. But by that time, discrepancies were buried in thousands or millions of transactions, and for fraud was easy to hide. With CTC, every single transaction is visible to the tax authorities within 48 hours. If there is a discrepancy, the tax amount that doesn't get matched, a missing tax ID, or an anomalous pattern, it gets flagged instantly. If we look at the real world in example, again, Brazil has pioneered this. They have been doing this real time on B2B and B2G reporting since 2011. Mexico also uses a pre-clearance model where invoices are validated before they are delivered to the customer. Taiwan requires a 48-hour submission window. Italy has a 12-day window. And now the EU's VIDA initiative is rolling out real-time reporting, especially for the large entities. The small and medium enterprises will be done in the phased manner. So this means that your invoices cannot be sitting in a queue anymore. Your system needs to automatically validate and submit them. If there's an error, it gets caught by the tax authority's system before it reaches your customer. So this can create a big supply chain risk. And if invoice is rejected, your payment is delayed, and your customer or vendor relationship is also strained. The second trend that we are seeing is primarily the AI driven. A lot has been being spoken about AI in each and every field. So even indirect taxation, a lot of AI and machine learning modules are being implemented for automating. So I would simply say that this trend is accelerating and will soon be covering a lot of things under the indirect taxes. So learning models, if we talk about them, they are being embedded into the e-invoice platforms to automate primarily four key functions. One, data extraction and validation. So that means that OCR reads the invoice, ML validates the data structure. Invoice to purchase order reconciliation, wherein the system matches the invoice to POs, automatically flags mismatches in real time. Anomaly detection. The ML models learn what normal looks like for your business and flag unusual patterns. So, for example, if your vendor suddenly raises a 10x amount, what he has been generally raising, so that creates a risk and a detection from the MLs. Similarly, fraud risk. So most of these modules have 50 plus data points based which risk score is provided to the invoicing. Now, if we talk about this AI driven, let's take an example that prior to AI ruling the entire framework. So a company generally receives, say, 1,000 invoices per month, and with traditional APAR, you we generally used to have 3 to 4 people manually reviewing these, and they maybe catch 80% of the errors. Now with AI powered system, the system validates all 1,000 invoices automatically, flags the top 5 to 10% which need human review, and processes the rest of the invoices immediately. But system is not only catching the errors, it is also catching the fraud patterns. Like the example that I took, that if a vendor is raising a monthly invoice of say 50K USD and suddenly is raising 500K USD, the system flags it so that somebody can review it and catch it before it becomes late. The third trend is PayPal accept framework, which reduces the entire complex framework of e-invoicing across the globe. So there are approximately 50 plus different e-invoicing formats which are being in use globally. So let's take an example. Brazil has NFE XML, Mexico has SAT format, Italy has Fatura Pay, Poland has KSEF, UAE has Zatka SML, US has UBL, and India has IRP based e-invoicing, and the list goes on. So from a business, this becomes the biggest nightmare. So if you're operating in 5 countries, you need to comply with 5 different formats. If you're operating in 10 countries, 10 different formats. And every format has different tax rules, different validation logics, different submission portals. Building separate invoicing solution for each country is expensive and complex, and it creates redundancy as well. You are essentially solving the same problem 5 or 10 times over, depending on the locations or zones that you're operating. So that's the solution PEPAL offers. So PEPAL stands for Pan-European Public Procurement Online. It's an international vendor neutral network for secure document exchange. So this is a hub. How it operates is you as a business connect to one PayPal access point. The access point connects you to the entire PayPal framework. So an invoice issued in Belgium can be received by a customer in France or Germany, all through PayPal's standardized infrastructure. PayPal recently launched something called PayPal International Invoice, which enables cross-border harmonization as well. So an invoice can flow from Germany to Malaysia or UAE to Singapore, all through PayPal's standardized format. So if we look at who is adopting PayPal, so Belgium is moving to PayPal, France, Germany, UAE is integrating with PayPal along with Zatka, Malaysia, Singapore, Australia, New Zealand are adopting the point-based specifications of PayPal. So this reduces the complexities around implementation of the e-invoicing. But this is not a game changer, and it doesn't eliminate the country specific compliance requirement. We have to be mindful of that. You still need to understand the VAT rules of the respective country. But what PayPal does it dramatically simplifies the mechanics of getting invoices where they need to go with a standardized framework. The fourth trend is pertaining to digital services taxation. So the recently we are seeing that most of the tax authorities across the globe, they are shifting from policy development to enforcement when it comes to digital taxation, taxing their digital services. So, for example, the European Union VIDA initiative expanded the scope of digital services subject to VAT. So platforms are now accountable as collection point. If you are a SaaS provider, a platform provider, or an e-commerce marketplace, you are not required to be registered and collect VAT in jurisdiction where your customers are located. Similarly, Saudi Arabia and UAE also have similar arrangement where they are trying to get the data from payment platforms to cross-verify whether the actual and correct VAT has been deposited. India also has been using data analytics and payment platform data to verify the OIDR compliance. And they are also cross-checking GST compliances against these transaction data. And based on our experience, we have seen a lot of overseas company which are being sent emails to explain why they should not be raised, or why they should not be taxable in India and why they are not registered in India under GST. Even US, the IRS launched form number 1099-DA for crypto and digital assets in 2025. So they are building infrastructure for real-time digital transaction reporting, but traditional business reporting to is yet not notified and will follow soon. So the bottom line is if you are supplying software or SaaS services, digital marketing, advertising, data services, or any kind of digital offering, expect a closer scrutiny in 2026 by the authorities because the authorities now have the data, the tools, and the mandate to enforce digital services taxation effectively. Now, looking at the implementation dates, so Belgium is the latest one who has implemented e-invoicing. And so if you're operating in Belgium with B2B transaction, you should already be live or in final stages of implementation. Poland, on the other hand, has two dates. Larger entity have to go live on February 1st, and everyone else goes live on April 2nd, April 1st. UAE is implementing e-invoicing for B2B and B2G transactions on July 1. Similarly, France has also adopted a phased approach, and by September 1st, large and medium businesses should be able to receive e-invoices. So not issue, but receive e-invoices. And the issuance requirements comes earlier of mid 2026, and small businesses get time till September 2027. On the other hand, Germany, India, Malaysia, and Saudi Arabia, so the invoicing is ongoing and the process, so primarily it is driven by B2B transactions. So if your business is operating in even two of these markets, say Belgium, France, or Malaysia, or India, you are facing a simultaneous implementation with different formats, different timelines, and different requirements. Now, let's have a breakdown into three zones on maturity and urgency. So, Europe is in the advanced stages where a lot of things are happening. The transaction covers in most of the European countries are B2B and B2G, which is business to government. The primary focus here is large and medium enterprises, and SMEs often will get some more time. The standard format for e-invoicing is PayPal network with local customization with each country, but overall framework would be under PayPal only. So, but the challenge is the phased implementation. So large enterprises will get a first mover complexities, and SMEs will have less time to prepare than large enterprises, which creates a crunch for mid-market supplies. On just a data fact that the European Commission estimates 200 plus million invoices will be processed through PayPal monthly by end of 2026. So that's a scale we are talking about. Zone 2 is Asia Pacific, where it's a growth stage and accelerating. So Malaysia has My Invoice leading with real-time validation. India already active for large entities. Singapore and UAE are advancing fast. Scope is B2B primarily and in some B2C as well. So these markets are expanding, and business transactions will include retail, e-commerce, and direct to customer sale as well. On these standards, it's a mix of UBL, JSON, national XML variant, not a standardized single format like PayPal, and which creates a complexity and main challenge as well. So, and the zone 3 is Latin America, which is a mature, proven, where we have the state 90% or 80% adoption rate. So much more mature market. So if you're planning to set up into this market, it reduces the uh, stable, mature market, and infrastructure is also proven. Best practices are documented. Lot has have spoken about the e-invoicing, but it doesn't come without challenges as well. So moving to challenges and their mitigation, the first challenge is the technical complexity, which is the most of the organization faces the ERP integration. So what's hard here is the e-invoicing platforms need to integrate tightly with your accounting systems, SAP, Oracle, NetSuite, Zero, whatever you are running. The integration has to pull invoice data from your ERP, transform it into the correct format for the e-invoicing portal, validate that data against country-specific rules, handle errors and rejection, retry failed submissions with proper logic. So if the integration isn't robust, invoices get stuck, rejections cascade, and you have a supply chain problem. So it's better to use a certified e-invoicing service provider with pre-built ERP integration. The second challenge is from format fragmentation that we have spoken, that we already have 50 plus different e-invoicing formats which are in use globally. So each with its own schema, validation rule, and tax treatment. So it's not about generating in the right format. It's also about understanding the tax rules embedded in each format. Reverse charge rules differ by country. VAT threshold differs. Exemption differs. So you need to have a jurisdiction specific knowledge, and that's where a organization or a framework like PayPal helps. So any experts or advisors who have deep expertise in the jurisdiction that you operate in will be helpful to consult. Third is the data quality. Now, a lot of has been said that garbage in and garbage out. So depending on the data that flows into the system, the output would remain the same, would accordingly. But if we see from a tax authority's point of view, so they are also having this machine readable invoice data. That means that they can easily detect discrepancies. Now, the invoice that they are seeing, they can validate whether the VAT calculated at the wrong rate, it, it is flagged automatically. Whether the tax ID is missing or invalid, the invoice is rejected. Whether vendor info that has been mentioned in the invoice, if it doesn't matches with the record that they have of that vendor, the AI triggers the investigation. So these are the patterns that if anything is anomalous, the AI is also helping them flag it and for a higher scrutiny. So this isn't the accounting problem. It becomes a compliance problem. It triggers the investigation and again more manas for the finance and the tax team. Finance and the tax team. So moving on to the business benefits that the companies take. Beyond the compliance risks, these are the real business benefits to an e-invoice adoption. So compliance automation, move from reactive compliance, quarterly VAT return, whether we have got it right, whether there are any flaws in that, to proactive compliance. That means continuous validation, instant alerts as soon as you raise the invoice. Operational efficiency, 40 to 50% cost reduction in invoice processing. Invoice cycle time drops from 30 to 4 to 5 days. Your finance team shifts from data entry to analysis and strategy, better use of human capital. Supply chain resilience, real-time invoice status visibility. Suppliers know when their invoice is accepted by the tax authorities and the recipients. Fewer disputes over payment timing. Cross-border trade becomes smoother. Then e-invoicing structure ready to go, easier to enter new markets, reduce time to compliance. And these are not theoretical benefits. These are actual benefits that early adopter companies are experiencing right now. So, what should you do if you have to start now? So, just giving a few roadmap that what we generally do or what we have seen entities who tend to adopt these e-invoicing framework. So they start with the audit part. So walk through the current invoicing process, identify gaps versus local e-invoicing requirement, ERP's readiness for integration, whether it can generate the data you need in the format that they need, where there's API connectivity or not. Then, if everything is in order, then the testing phase, the UAT phase, and then the go live phase. This is how the framework should look like. Now, whether another question that we tend to get is whether to have a centralized platform, which is one vendor globally, or have a decentralized platform that means having regional vendors. So, what centralized platform offers is primarily that it is a simpler compliance management, consistent processes, easier training, and a single vendor relationship. But the only con you may say is that vendor may not be the best of breed in each and every region, providing less flexibility for regional customization. However, on the other hand, the decentralized platform, they are best of, you can choose best of the breed solutions per region, more flexibility for local requirements and competitive pricing. But on the con side, you may see higher operational complexities, multiple vendor relationship, harder compliance management, training complexities. So if we my recommendation is always to go for a centralized pet platform with regional customization wherever applicable or wherever the vendor can support, because that they may these centralized vendors may not be 100% best of the breed in each and every region, but the operational efficiency of one platform generally outweighs the marginal benefit of the best of breed vendors. So these are the trends. So while they are not currently applicable, but these are the trends where we see a lot of movement happening, and in the next 5 to 10 years, we might see these getting implemented and might reshape the entire framework of indirect taxes. So one definitely is blockchain for invoice immutability. So some countries like UK, Canada, and some Middle East markets are exploring blockchain to create tamper-proof audit trails. So the idea is to invoice is stored on a blockchain so that nobody can modify it retroactively. When it would be implemented, hard to say, but 3 to 5 years is a timeline that we can start seeing this. Similarly, trend two, which is IoT driven automatic invoicing, smart sensors automatically triggers invoice generation. Shipment arrives at warehouse, sensor scans it, invoice generated automatically. Relevance for mostly logistic heavy business or manufacturing. Expansion of CTC to B2C. It might still take time, but yes, we'll soon see that. And AI powered predictive compliance, risk before submission. We'll have to see if it doesn't align with your industry, then you might have to answer that. I think that's it from my side. So before handing over to Shreya, I'll just say that in e-invoicing is no longer a nice to have in 2026. It's operationally critical, it's compliance critical, and it's competitively critical. So the question isn't whether your business needs to comply. The question is how fast can you get it implemented? With that, I end my presentation and hand it over to Shreya.
Thank you, Ankur, for that excellent presentation. That was a very clear and practical overview of how global e-invoicing landscape is evolving. We are moving on to the Q&A session, and I can see that we have two questions for you, Ankur.
Yep.
One is that is it better for companies to adopt a single global e-invoicing platform, or should they plan for country-specific solutions? What are you seeing in practice?
That's what I covered in the second last slide. That I would always say that if you are just moving out and you have not tested the markets, don't go for different vendors, because it's always better to deal with one vendor who can who can cater to maximum of your requirements, because that gives you a liberty and operational efficiency as well.
Sure. And one more question. How are companies managing data standardization across multiple e-invoicing regimes while still complying with local validation and reporting requirements? I think this is a related question.
Yeah, it's a related. You can't do so, and you have to focus on. So, for example, if I talk about EU countries, so PayPal network is one which standardizes the format, but we are not seeing that. So, unless until so, while PayPal has launched Pint, which is their international interface, unless until it is widely accepted and adopted by the countries, we might have to continue to live with that different schemas and validations.
Sure. I don't think we have any more questions, and we still have some time, and it's a Thursday evening. So I think I'll end the webinar here. It gives everybody about 7, 8 minutes extra. So I think thank you once again, Ankur. What today's discussion really reinforces is that e-invoicing is no longer regional or localized. It's become a global standard. And for businesses, that means compliance is increasingly built into everyday operations, not handled separately at the end of the process. Many of the global trends that we discussed today are already visible in India's GST framework. And they also set the foundation for developments such as the invoice management system and the growing use of AI in tax and compliance. Hopefully, in the next session, we can touch upon those aspects, specifically on India's landscape as well as on IMS, and how technology and AI are shaping practical compliance for businesses operating in India. Lastly, I'd like to close by thanking Mr. Ankur Gupta, and the stellar SW team, including Kunal, Nitin, and Manisha once again. It was an absolute pleasure. You walked us through the landscape. I mean, it was very informative for me, and I'm sure it would be for our members as well. And thank you all for joining us and for your engagement. Please do stay on for the next session. We'll keep you posted on the details. We look forward to continuing the conversation. Thank you and have a lovely evening.
Thank you so much.